Also hope you're learning from whatever we post or what we're trying to communicate to you people. Yes, today we're going to look at the different insurance products that are available in our market here in Uganda. We're going to tap into the most common products. We're not going to look at all of them, but we're going to highlight a few insurance products that are here in Uganda. And then the brief descriptions are going to be given, but we shall have a detailed further explanation in our next videos. Don't miss out. Always subscribe to our channel and get the notifications whenever new information has been put on our channels or different platforms that we do have. Yes, looking at the first insurance product sold here in Uganda is what we call motor insurance. Motor insurance usually covers accidental damages to an automobile. Automobiles, you're looking at a motor vehicle, looking at motorcycles, looking at lorries. All those are covered under motor insurance. And then theft of items or theft of parts on the vehicles also covered under motor insurance. When you knock another vehicle and your vehicle is damaged, you find that insurance companies come to repair the third-party vehicle or the other party's vehicle and also repairs your own vehicle at that point in time. Then we have what we call medical insurance. Under medical insurance, all you need to do once you've bought medical insurance, that means now you have a medical card. When you fall sick, unfortunately, you have to go to the hospital, present the card of the insurance company which you got the card from, and then you'll be administered the medication or the treatment. At that point, you don't need to use your money. That card usually has monies or has limits that are given to you depending on the premiums that you paid. Then we have what we call credit life insurance. These are basically, this is a loan protection insurance whereby you go to the bank, maybe let's say you have your property that you put to the bank, and then the bank advances you a loan, let's say maybe over 100 million. And then at a point you're still paying, and then unfortunately you die before even completing the loan. By normal procedure, the bank can take your property because it's a security that you've given them, that if I fail to pay, you take my building and you recover your monies. But in this moment in time now, the insurance company comes in to clear the loan since you're no longer there and the people you've left behind are not interrupted. So that means your building remains untouched, and then the insurance company pays for the loan that has been outstanding. Then we have what we call endowment policy. Endowment policy, usually these are like saving plans. Let's say maybe you have a plan of maybe saving for 10 years. And if you have a plan of saving for 10 years, maybe you're saving, let's say 100,000 per month for 10 years. Then at the elapse of the 10 years, you get your savings plus an interest. And then when you happen to die before the elapse of 10 years, you get the federal benefits that are given to the people that you leave behind. Then we have what we call property insurance. Under property insurance, I'll give an example. You maybe are covered to your home and the contents that are in your home. That whenever your building or your home is damaged, then insurance comes into play to cater for the damages or to reconstruct the building that has been damaged. For example, some of us now ask ourselves, but why do I need to insure my home? There's nothing that can happen to it. I mean, it is in the safest place, nothing can happen, but you can't know what's going to happen tomorrow. Someone might be driving a lot along the way and hits your home down to the ground. At that point in time, when you have insurance comes into play and you pay very small percentages. Less than 1% is a good percentage to pay. If your building is around 300 million, you lose nothing insuring it for less than 1% per year. It's very small amounts of money, guys. Let's always insure our property. Let's always be protected at all times. Then we have what we call federal cover. When funeral happens or when you lose someone, you're not prepared. Funeral comes at a point whereby you're not prepared. But when you have funeral cover, then the insurance companies come into play. They cater for funeral expenses, burial expenses that are there. Maybe they have to construct a ground, they have to buy a coffin. All those are covered under funeral cover, and you pay small amounts of money. For example, you might pay 100,000 per person maybe for a whole year. Then if you lose someone, you have benefits that can help you to bury that person. So all those covers are there. Otherwise, thank you. If we have time, we shall look at them later. Thank you very much.